We have a special guest with us today, Mr. Noel Cookman, the person, the man, the myth, the legend, the GOAT himself of mortgage. Me and Noel have been trying to get together to do a podcast or talking about something for the past probably year now. And I work with Noel on a weekly basis. If not, we don't talk. If not, we don't talk daily. And we keep talking about having him on here because every time our discussions is just like we could just talk every week about our problems and clients and issues that come up, and it could be a great discussion. So today we were actually doing that again, and we just said, hey, let's actually jump on here and do it. So, uh, and now to introduce you to who Noel is, as far as that, he is the Mortgage Institute. He has been doing divorce lending for 20 plus years. He kind of started this niche in a way without even knowing it. He's helped train attorneys. He's done CLEs for attorneys. He's been my mentor for the past 5 years. And I think I just can't say enough good things about him as a person on top of all of that, right? So, and Noel has a book coming out soon. He has written a book about everything a divorce attorney wants to know about real estate or mortgage lending. So great to have you actually here recording with you, Noel.
We're finally doing something.
Noel's book will be out shortly, and so today you have two authors me and Amber wrote a book, and now Noel's book's coming out shortly. But I think today we're going to do a video basically talking about what kind of documents do you need when you are divorcing to make sure that those documents are done correctly and you're getting the right ones to protect yourself, because we always deal with all things real estate related as far as divorce. That's really our expertise. And so, like I say, I learned almost everything I know about it from Noel, and just real life working with other clients. Case we have just this week, we have lots of different clients we're always working with that are divorcing.
Like attorneys really like those cases. I've had some tell me you just need to keep publishing all those I call them case studies. I think in legal terms they're called case law or case study, whatever. But for us, it involves the real estate and the finance. And back at you, by the way. We're excited about your book. Just came out. We just got ours in the mail, ordered it on Amazon.
Yeah,
I got to drive down to Houston
there
to
it
get
is.
it autographed.
Yeah, you get an
Great.
autograph, right? Yeah. Only
And
I've
all
had one
my
other
clients
person
need it.
ask for an autograph so far, but that's okay. So I want to specifically talk about the deed to secure assumption, because that is sometimes the last kind of line of defense that we talk about. Obviously, it's not what we recommend with a client that is going through divorce. A lot of times we want to either, and from this is, I'll say from me and Amber's perspective, we say some of the safest thing is to sell the home, just to kind of, if you can't keep the house, it might be selling the home. But then option B, which quickly follows after, is like, okay, you're either going to do, we always talk about either doing some kind of refinance. And usually what we recommend is doing a buyout versus the cash out, because the rates and terms are better. You get some more flexibility as far as how much you can borrow. And there's other things we can do as far as like from a lending perspective that just makes it a better way to do it. Since you are going through divorce, you can buy out that person's interest. And then the third thing we talk about is like, well, can you try to do an assumption of the current mortgage? Which the problem with that, we always recommend clients, is that like you can't get any money out of the home, so you're just, the rates and terms are staying the same on that assumption, and you can't really do that until you're after already divorced. So, and I
Can't
literally
even
had a
start
lady,
the process. Can't even start
yeah,
the process of the divorce is final. So you end the divorce or you end the marriage, at final divorce, and nobody knows on either side if it can actually happen.
yeah,
It's a black
that's
hole.
That's the problem. Yeah, this is like, and we always tell them, well, we can't really help you on that because you got to talk to the current lender. They won't talk to you. Your divorce finalized until you already have everything all worked out. I had a lady just message me yesterday, said, hey, it's been a year now, still trying to do the assumption, and they denied me, and I'm going to go back to them. And she said we emailed back 300, 400 pages of paperwork and still can't get it done. And I'm like, yep, that's no one's. They're not incentivized to get it done. No one's really getting paid too much money. It does cost money and it costs a lot of time, but it doesn't really, like solve your problem easily. This is very, very definitely the difficult route if you're going to try to deal with a house during divorce. But we're going to specifically today, we're talking about the fourth option, which is the deed to secure assumption, which I don't recommend personally because I feel like it's just kicking the can. Um, but it can be used in the kind of correct situations. Maybe with, maybe someone has been a stay-at-home mom, doesn't have a job, they can't afford to do their assumption, they can't afford to do a refinance, and they think staying there in the home is the best option. They agree mutually it's the best option. Um, and I think it's just the problem is we don't recommend it because it can cause issues later because you're not fully taking ownership. The mortgage isn't getting addressed essentially. In the short term, it's just saying the person's going to stay on the mortgage, right? And the person who's staying in the home is going to just keep paying that mortgage. But what we get a lot of calls about later is like, well, hey, well, they're not paying it. Now what do I do? I'm like, okay, well, go get another attorney, right? So you're back to court again, even though you thought you finished all that as part of the divorce decree. You're back in court again, getting maybe a real estate attorney and a family law attorney now. You got two attorneys that deal with the same issue that you probably should have handled in your family law case, a couple years prior, but you kind of kicked the can. So that's what I call it, kicking the can.
That's why yeah, we see eye to eye on that. That why you don't recommend it. I think it's not that you don't recommend it, but you don't see. Here's what not that long ago, and as a matter of fact, it still probably happens with lawyers. And the case you're talking about, the guy didn't have a lawyer, right? I mean, they used forms from.
So yeah, I have two different clients right now. One of them was pro se, and they just basically used a standard form online, right? And all it says is like, well, actually, I had two clients reach out to me this last week about forms, and one of them they used the wrong form. They used the one that had no property. I'm like, you shouldn't even be using this form. And then I had another client reach out to me, and they said, hey, here's the form we used, and he had in this particular case. He said they did have community property, and he just gave it to her in the form. And I'm like, well, you gave her the house and the ownership, and it said that he would file the appropriate deeds, which he didn't do because he doesn't know what those appropriate deeds are. And like I told him, you need to file a special warranty deed to give her ownership. But they're not addressing the mortgage once again. So now I'm like, well, now that mortgage is still your liability. Even if she doesn't pay it, you can still be harmed as
So,
far as your credit.
so the form actually said she will file the appropriate deeds. I mean, it was just generic like that.
Yeah, I just
Oh,
said you would
wait,
file
yeah.
the appropriate deeds,
Well,
it's like,
here's why it doesn't work. The some people don't realize those forms are promulgated by the Supreme Court of Texas.
mhm.
Now, that may sound impressive to a lot of people, but let me just tell you what the reality is. That means the people who wrote those forms, the Supreme Court, they have no idea what they're doing. The highest court in Texas has zero idea of what they're doing when it comes to divorce and when it comes to the deeds and the transfer of property, the placing of OLT interest, which is that buyout. They don't know what they're doing. And you may think I'm crazy to say it, but trust me, the group of people that know less about that than the general public are or is a lawyer, not lawyers, well, some lawyers, but as judges in the district courts and the Supreme Court. Trust me, people, they have no idea what to do. That's why the right, they put a generic phrase, they'll execute the appropriate deeds. Well, the appropriate deeds to do what? There's deeds that convey interest. People will still think a quitclaim deed is what you do in a divorce. It's totally useless.
Yeah.
And then there are deeds do different things. And the what you're calling a deed to secure assumption is short for deed of trust to secure assumption. And what that is, matter of fact, if they'll email you or me, I'll have a paper that kind of describes the relevant deeds in a divorce, what they do. And this really is not a so much of an option in divorce as it is a remedy for the exiting spouse, the spouse that doesn't get the house. So the house spouse's spouse, or we call the exiting spouse, leaving the house, but they're still on the mortgage loan,
Hmm.
and they want to just give the house, or they're technically giving their interest in that house to the house spouse. A lot of people don't understand how important it is to get the financing taken care of as soon as possible, which means that's got to be in the decree. that they have an obligation to refinance that mortgage and get it out of the exiting spouse's name. But either because that might take a while, um, and I would say even if it's going to take more than a couple of months after filing divorce, you still need this remedy document, the deed of trust to secure assumption. But especially if it's going to be a couple of years, or if there's no requirement at all, which is really dumb, 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 dumb. Don't
Yeah.
do that. Don't ever
Yeah.
just leave it open-ended. You're just asking for problems, even though you have this deed of trust to secure assumption. So two main problems is people don't know about it. They don't know what it does, and it it does not cure anything. It doesn't fix anything. It doesn't produce money for a refinance, for instance. And it's like you say, it's kicking the can down the road, and it costs money and time and energy if the one person, the exiting spouse, does anything with it. And so here's how it works. Basically, the house spouse signs a deed of trust to secure assumption to their ex-spouse now, who uh, wants that document because they're still on the loan. The document, several pages long, basically says you got to meet the terms of the underlying deed of trust, the deed of trust that is signed and executed and secures the note. In other words, the promissory note, the promise to pay that loan back. And you're promising that you're going to satisfy that underlying deed of trust to the house. In other words, you're going to pay that mortgage note, and so that the exiting spouse is not going to get dinged on his or her credit because a payment is late. Well, there's a couple of problems. One of them, the biggest, is that by the time the payment is late, that's what triggers this remedy document, this deed of trust and secure assumption. And it says if the house spouse doesn't make payments or defaults on that deed of trust and the promissory note, then the exiting spouse has the rights to foreclose their interest on that property. Nobody knows how to do that. I mean, nobody in the general public, and many people in the legal field don't know how to do that. That takes time, money. You got to know what you're doing. So
Yeah.
meanwhile, the exiting spouse their credit gets dinged for however many months that house spouse is not making those payments. So that's why we call it a remedy. In other words, it gives the exiting spouse something that they can do. They can come back and say, you're not making payments. I'm going to cure the default, pay some fees, and then they can repossess the house, or they can sell the house on the courthouse steps. And they would normally sell it to themselves so that they're basically taking over the house again.
Yeah, so
So
you bring up a great point there. Like the idea, like this is just a remedy for when something doesn't go as planned. Of them, like hey, here's a backup plan in case they are not making these payments. Here's a remedy we're putting into place. Now that remedy, it, you still have to enforce that remedy, and you not being an attorney are going to have to get an attorney probably to help you remedy this, right? Because you don't know how to do it. I don't know how to do it. Knowles doesn't really know how to do it necessarily either, because that's not what our expertise is in. We're not in judicial foreclosure remedy, policy police here over here. So the idea that it's just going to be like, oh, this is just going to solve all your problems, like no big deal. Don't worry about that man behind the curtain kind of thing. Like, I think that's just ludicrous. And I think sometimes attorneys will put that in there and like say it's the last thing I go to. It's my least favorite of I want you to either sell or refinance is probably the two. Try to do the assumption if you got the money that you can get. Because the other problem with the assumption is if usually that spouse wants that some of that money, and so you don't even know if you can do it until afterwards, and then you got to give them some money that probably because so that one's a maybe, who knows if you can do it or not, and you might come back to us anyways trying to refinance it. And then this fourth one's like, okay, you're in a really tight spot and both you and your both you and your spouse or soon to be ex-spouse agree that this is what we're going to do. But like Noel said, for a little while, that's probably okay, right? Like, hey, we're going to do this for 2 years and then you're going to sell, right? Or you're going to do this till the kids graduate or something, right?
Now, a
Or
lot of
we
bad
got,
things can happen in that 2 years, but yeah, I mean, it's it should be intended to be very temporary, but I mean, people can agree to have it open ended, which again,
which
I
I
think is
would,
a terrible idea.
yeah, which I would advise against too, because like Noel says, like any point that person can lose their job or get sick or get angry and just decide, well, I'm not going to do that now. Because I've had all three of those happen. The clients that called us, one of them just said, I'm not going to do it. I don't care. I am already in the house. I don't care about your credit. You're doing something I don't like, so now I'm going to hurt you back with get a late
Yep,
payment. The
it
other
is
one,
a
it's
divorce.
yeah, you're
So,
divorcing for a reason. It's not probably because you guys had great, communication the whole time and are best buds again, right? You don't have to hate your
well,
spouse after divorce, but who knows what could happen post divorce that changes each other's mind.
um,
You
we hear a
muted
lot
yourself,
about loan.
but you're good now.
I'm muted.
There you're good
Oh,
now.
somebody's trying to call in. Sorry.
Let's pause for a second.
And somebody tried to call in. I forgot to mute the notifications.
You're
Uh,
fine.
one of
Go
the
ahead.
you hear a lot about loan assumptions,
Mm-hmm.
and then you hear about the deed of trust to secure assumption, and people get those confused.
Mm-hmm.
Here's what happens around the negotiating table. A lawyer says, "Well, my client's going to get the house, and we'll give you guys. We're going to trade that off for we'll give you a deed of trust to secure assumption." And most of the lawyers I've talked to, they barely understand what that means. They think it's a tit for tat. It's like,
Mm-hmm.
okay, we get the house, you get the deed of trust secure assumption, as if it's an even trade-off. But the person who gets the deed of trust secure assumption has just taken, is liable for the loan already. That's why they're getting a deed of trust to secure assumption. That's the promise of the house spouse to pay the mortgage note, but it's still a contingent liability. They're not off the hook. The lender doesn't take them off the loan. You can't make a lender do anything with a deed. You can't make the only thing you can do with a deed is mess with it, and then the lender has a due on sale clause in their deed of trust that says you got to you got to pay that loan off in 30 days, or we're going to sell it at the courthouse steps. So you don't force lenders to do something. You don't force them to let you assume a loan by filing a deed of trust to secure assumption. So that can get very confusing. Most people don't understand what a loan assumption is anyway. They think they're just automatic. No, you have to qualify for a loan assumption, but then the deed of trust to secure assumption goes the opposite way, so that the exiting spouse gets some kind of security to secure assumption,
Mm-hmm.
security such as it is. And the only security they have is that, because they're not on deed to the house anymore. They've signed their interest over to the house spouse. So they're still on the hook for that loan.
Yeah.
And so it
So
can be very confusing. You need to call Scotty or me if you're, especially if you're filling out these Supreme Court promulgated forms that don't have things like sign the appropriate deeds. Well, the Supreme Court doesn't know what the appropriate deeds are. You don't always need a deed of trust to secure assumption. And, but anyway,
yeah.
you,
Well,
you
it's
got to
I
call us.
I agree with you. I think you need to make when you're dealing with anything as large as the house, you need to have somebody that knows what they're talking about. And like Noel said, hey, like you can reach out to one of us. I'll put both of our contact information below. You can reach out to one of us, and we would be happy to, you know, see where you're at and see and help you. We'll meet you where you're at and help you get connected. If it's not to us, to someone, attorneys. We know a lot of attorneys. If you need an attorney, help you file something, or if you just need to have a conversation about what you need to do as far as doing the house stuff, we can help you make that informed decision because that's what both of us want is help you make informed decisions about all your real estate needs, right? So, but let's break it. I'm going to go back a second. No, let's break it down to maybe something because we're using terminology and I'm beginning to sound more like you because I've been around you so much. I start sound more like
Uh-oh.
an attorney because you know all these
Uh-oh.
big words. So let's break it down because most people don't even understand there's multiple things that documents that are being produced when you buy a home. So let's take it back one step, and then we can maybe this makes more sense. So first, let's start off when we go to buy a home in Texas. We go and we talk to a lender, we get a realtor, we talk to a lender, we pick out a house, and then we go to the paperwork. What are we signing at all those on the paperwork we're signing? Usually, we're usually signing the mortgage, which is called what in Texas?
Technically, a mortgage is the deed of trust that the
Yeah.
lender gets you to sign to them. A mortgage note, most people say mortgage and they mean the promissory note.
Hmm.
And then the deed of trust secures secures the payment of that note with the property. In other words, the lender doesn't own the property, but uh, they secure all that money that they're lending for you to buy their property with a deed of trust, which gives them foreclosure rights. Just think of deed of trust equals foreclosure rights. And so they get the property if you don't pay the note. So you're signing a promissory note to the lender. You're
Hmm.
signing a deed of trust to the lender that says, look, here's the property. If I don't satisfy the terms of this promissory note, it's your property. There's a process they have to go through, but and then the new buyers, you're buying a house, you get from the sellers a warranty deed or a
Hmm.
general warranty deed, which is transferring their interest in the property to the new owners. A seller has to do that when they sell their house. So those two deeds and a promissory note. And by the way, if you want to go from point A to point B the quickest way, one of our businesses is a legal department that prepares these deeds. So if you get confused and you wonder what do we, I'm not sure what we need in a divorce, for instance, um, you just call us and we know how to wind our way through that whole thing and determine what deeds are needed and which ones are not. But anyway, yeah, that's at the purchase. Sorry, I got
Yeah,
off
so
track.
yeah, so that kind of sets the groundwork for us, like, because what we're dealing with, like, a lot of times is like, okay, so you're going in there, you're signing your promissory note, which is an IOU, like, hey, I'm gonna pay you back this money. You lent me this money, right, under whatever terms you agreed to. You put down whatever amount, and this is your payment. They're telling you what that is, and you're agreeing, hey, I'm gonna pay that back. And then you're getting they're making you sign the deed of trust, which is securing the mortgage. So in case you don't pay that mortgage, the IOU back, that the promissory note, that you would lose ownership of that property that has been deeded to you by that previous owner, right? Because you took ownership from that previous owner through the warranty deed, and then now you are the owner. And then there's a fourth term in there too that we'll talk about, maybe just the how you take possession. Maybe you take possession as a married couple. Maybe you take possession as a single person. There's other different ways to take ownership of that property. And a lot of times when in Texas, when you are buying a property, when you are married, you're taking that property as a married couple so that it is community property, right? So when if two people that are married buy a property, that is community property, whether or not one of them who gave how much money, right? The money, someone might have more quote unquote equitable interest in the property, but if it's assumed to be community property unless stated otherwise, right? So I think that's leading back to the idea, if you're going back to the divorce situation, if it is a community property that you bought and you have all these deeds and warranties and who's on the mortgage, who's on the deed, we need to make sure who's what, and then how to unwrap that bow we just wrapped up for you there. How do we undo that if you are divorcing now? That's where me and Noel come into play and go, okay, let's see where you're at and how we can best help you unwrap this.
Okay, so that's where we are now. What do you do with deeds when you're unwrapping it in a divorce? Think of when you buy a house, you are an owner. You're called an owner of the house, even though you don't own it free and clear. If you borrow money on it, that doesn't mean you don't own it. You're an owner, and people say, "Well, the bank really owns the house." No, the bank doesn't own the house. You have an interest in the house. You and your spouse have an interest in that house, and the bank, the lender you're paying the promissory note to, has a security in that property. Their
Mhm.
security is that deed of trust, and that just secures because they're not just going to let you sign a note to them, say, "Yeah, I'll promise to pay it back." That would be what you call a signature loan or unsecured loan. But when you're buying a house, a property, the people who lend you the money want to be able to come and foreclose. That, by the way, is why you get the lowest possible interest rate on a primary residence, because it's the best security for lenders. And you may think rates are high nowadays or at certain times, but it's the lowest possible rate or the best possible terms you generally get is buying a house like that. The bank doesn't own it. They have security in it. So think of security as the deed of trust. You are the owner. And in Texas, there's a presumption of community property. If married people are living in that house together, at least there's homestead interest or rights that the people have in it. You can get, you probably don't want to get off on this tangent now about if somebody buys a house and then they get married and the person they married moves into the house, is that community property? It's always safe to say assume it's community property, because in a divorce decree, if it's not community property, the divorce language will say this is so and so's separate property, and it has to be defined like that. But and that's why it's not related to who signed that original deed of trust to the lender. This happens a lot in our cases that get referred to us. Somebody moved in after they got married, and how do they split it up? Well, there's an underlying presumption, not so much that it is community property, because it can be set out in that decree that that house is separate property, but there's a presumption that it can be community property, and all you have to do is not declare it as separate property. For instance, we've had many cases where the person who moved into the house after their new spouse, bought the house, it technically could be their separate property. I'm sorry, it technically could be not their community property, and it could be defined as their spouse's separate property, but that house, that spouse who bought the house, and it could be their separate property, can we've had this where that wasn't the spouse who wanted to keep the house, it was the other spouse, and they agreed. The spouse who came in later, and it's not technically community property, they can be awarded the house if that's what they agree to. And so what I'm trying to say about the presumption that it can be community property is simply, like lawyers are asking me this all the time, like, well, Joe moved in, Karen bought the house, and apologies to Joe and Karen, these are fictitious names, but Karen bought the house and Joe married and moved in later, and now they've agreed that Joe's going to get the house, but oh my gosh, it's Karen's separate property. Well, technically, sure, you can carve that out as separate property, but all you have to do in a divorce, if that's the agreement, that Joe, not his community property technically, or his separate property, you just simply award it to him. And that blows the attorney's minds, because like, wait a minute, how can you award it to him? It's not even his community property. It doesn't matter. You've got a presumption that the two of them can agree to do that. Boom, Joe can be awarded the house, subject to a buyout or whatever.
He's got so much knowledge in his head that sometimes like he just wants to get it all out. And me too. Sometimes like I'm
That's a
off.
nice way of saying it.
I'm off in left field. We're talking about pitch where the pitcher was pitching, but now we're in left field. It's all relevant. The idea that like, hey, community property, sub property. So we have, both Noel and I probably have blog posts about community and separate property as well too. We talked about it before, but the idea is like going back to the deed to secure assumption. You know, if you are going to be signing that, right? And I think sometimes this is the other confusion that gets to happen is like, well, who signed which deed to who, right? So like in a divorce case, in the cases where they just did it themselves, the pro se's, and they're not doing any of the paperwork. I just got off the phone with another attorney a little bit ago, and for a case that we'd referred them, and they couldn't get the out spouse never signed the special warranty deed, so she'd been living in the house and doing everything. They were divorced, and she was awarded the home, but he never signed the special warranty deed, so she never had full ownership of the property. Or he never actually gave up his rights to the property by not signing away the special, on the special warranty deed. And the reason it's a special warranty deed versus like the full warranty deed, and Noel, you can correct me on if I say anything wrong in here, you're welcome to. But it's special because it's limited in purpose, purposely limited to the
Yeah.
time of ownership while the couple was married. He's not guaranteeing it before his ownership, after his ownership, and he's only guaranteeing it during that time that he knows about, that he didn't make any other things that would cloud title, so that it could be transferred to her, as owners, as to the owner, now.
Yeah, I think a good way to understand it, if you're not divorcing, put yourself in a divorcing couple situation. For the most part, both of the spouses, here's what community property means. Both spouses own the property. People think, well, he owns 50%, she owns 50%. No,
Mhm.
both of them own that one property. That's why they don't divide. That's why it's not called, um, they're dividing the property. Although in a decree, I don't want to get off on this. A decree, it might put it listed under division of property, but you can't think of it this way. You can't look at my
You get your photo in the
exit here.
background, right? You're not dividing the
Yeah,
property down in half. I'm taking this half, you're taking the other half.
yeah,
Yeah.
yeah. That I mean, it's based on a couple of funny true stories. Not too funny if you're the people, but the guy in New Jersey, this judge said, "I'm giving you half the house," and he goes home, and the police pulled him off his roof. About 2 hours later, he had a chainsaw on top, and he was trying to saw it in half. I mean, people do
He was
crazy
gonna,
things, but
hopefully he was taking the
since
good side of it.
so in a divorce, when quote the wife gets the house or the husband gets the house, they don't get the house. What they get is the other spouse's interest in that house.
Mhm.
And that's what is in a special warranty deed. So that's the first, if you want to list them out, that's the first deed that gets signed. In other words, the exiting spouse says, I'm giving you not the house. So technically, you say you got the house. No, you already have the house. Think about that.
Yeah.
But it's a kind of a funny word is partition. They
Mhm.
partition the property, which is an attorney told me this several weeks ago. It's actually a theological term, like what God has put together, that no man part or put
Mhm.
asunder. You cannot part. You have to partition. So it's kind of an accommodation. But anyway, you partition the property. So the exiting spouse says in that special warranty deed, I am giving you my undivided, because it's not divided with anybody. He owns it with her. It's not 50-50. If it was 50-50, he could give his divided interest, but it's an undivided interest because it's one unit, two married people, one property, and he partitions it, or he says, I'm giving you my interest in this property. It's as simple as that, the special
Yeah.
warranty deed. And the and the document that comes the other way is coming from the house spouse, and it's called a deed of trust. Hold on, don't try to write this down. Just email us or whatever. We'll send you a little paper on it. Deed of trust to secure olty of partition. And it would be, I would love to sit and talk about that and explain it, but it's boring. Basically, the house spouse says, this is when there's a buyout. You don't do this unless there's a buyout to the exiting spouse. If the exiting spouse just, quote, gives their spouse the house, no buyouts intended, that's all you need. But if there's a buyout, in other words, they come to terms, my part's $100,000 in this house, then that's called an OWLTY, OWELTY of partition. And there's that word partition again. It says, okay, for my interest in this house, we've agreed that I get 100,000. So the house spouse says, okay, now there's a deed of trust that you have an interest in this house, just like the bank does. They have an interest, not an interest in the house, excuse me. The exiting spouse gives their interest in the house. Now they have a security, deed of trust. Remember, deed of trust equals a security. You're using the property to secure, say, hey, I got a strong promissory note here. I can get the house if they don't pay it. So this exiting spouse exchanges his interest in the house. He's got to give that to a house spouse, and he gets a security, just like the bank has a security for his 100,000 or 50 or whatever the agreement is. They get a security in the house, and that's called a deed of trust to secure olity of partition. If you want to geek out, just read my books and my blogs and stuff, and otherwise
Yeah. So
read it
this,
before you go to sleep at night. It'll put you to
yeah,
sleep.
no, I mean, you're covering the other idea of like buying out their interest in the house, which is a really good thing to know. And that's what we usually help people do is, buying out their spouse's interest in that house and then giving that out spouse some money to that part of the divorce, right? And I didn't have Noel in my corner when I went through my divorce, so I just went back and did a cash out refi, which is limited to 80% of the home's equity, right? And we didn't have very much equity anyway, so that full 20% of the home's equity was in the home. I didn't even, after fees and everything, I probably walked away with maybe 5 or 10% of the home's value at the time, and then I gave up my interest in that home. And so then later on when the home went up in value and she sold it, well, she got that full, all the rest of the value of the home. So I gave it my interest, but I was wanting off the deed and I was wanting off the mortgage, right? So I was like, hey, this is the only thing I know to do. I didn't know about, the OLT partition. I didn't know that we could tap more equity. Otherwise, I would have said, hey, give me some more money, right? Like I didn't have me or Noel in my corner to help me, right? So I didn't know what I didn't know. And so this video, which is intended to be just really me and Noel were talking. Like it's kind of a master class in a way. If you can actually go back and probably rewatch some of this, you probably will learn more than you ever wanted to know, and you could probably go back and educate your attorney or anyone else about what actually we should be doing.
The difference between the mortgage note that gets reported to credit bureaus, so forth, and the title to the house or your deed to the house. Those are two separate but related issues.
We'll wrap it up here for today. But I think thank you, Noel, for joining us today. We'll get you back when you get your book in your hand, and we can you probably have it available in the link below. But thanks so
Yeah.
much, and
Love your book. Everybody get your book. My family, we love the book. Of course, we love y'all and your story. It's amazing. It's amazing. You're gonna love it.
appreciate that, Noel. All right. Well, as always, ready to bring the real life experience to all your real estate needs.